How do you decide what share to buy? In this video I'm going to show you how I've come up with a choice of share, how I've done my research and how I actually go about buying a share using the Trading 212 platform. I've done a bit of reading up, and a share that has caught my eye is Royal Dutch Shell on the London Stock Exchange. It's RDSB. Now be careful when you do buy these shares. There's two classifications, the RDSB and RDSA. We want to go for the B shares, as these have a UK source for tax. If you go for the A shares, 15% dividend withholding tax is levied. Now, the first thing I've looked at is the net debt of the company. That's 96 billion. The income before taxes is 25 billion. I divide 25 by 96 and I come up with 3.78, and this indicates the number of full years it would take to cover the debt, and that's 3.78 years. Anything under 5 is good. The PE ratio, the price earnings ratio, that's the share price divided by the earnings per share, and that's 5.62, which is low compared with many other shares. Here are some questions to ask before you press buy. Number one, what does the company do? Well, it's an oil industry company, and it does it goes into exploration right down to selling petrol. So it refines also and has everything associated with the oil industry. It's also going into renewables. Two, why will the share price go higher? The price is down 51% on the year, and the price of the shares have tracked the price of crude oil, which has gone down and is now starting to climb, and we're now coming out of the coronavirus shutdown, so everything is going in the right direction. Number three, how high will I let the share price go before I sell some or all of my shares? The minimum increase will be a return to the 1 year high. Then I may consider selling, or selling some to cover a bit to take a bit of profit. 4, am I buying something that has gone down a lot? If so, why will it recover if it hasn't so far? Well, as I've mentioned, it's down 50% due to the oil price and the pandemic, which we're now coming out of. And yes, that's my answer to that one. 5, how low am I prepared to see the price fall before I leave? What will my stop loss be? The price of these shares may fall further, but I am absolutely convinced they will rise. Therefore, I will not enter a stop loss. I will just run with these shares because I'm absolutely convinced they can only go one way ultimately, and that is up. Question 6. Could the shares be a lot lower in 6 months' time? What is the worst case scenario? The major weakness, am I really comfortable with it? Yes. If the pandemic has a second wave, the shares may go down again, or if OPEC do not agree and the oil price drops, the shares may go down again. But we are going to need oil in the future, and Shell is a strong international company, so ultimately they will rise. 7, have I checked the net debt? Yes, the net debt is 96.42 billion. The net income before tax is 25.48 billion, as mentioned. So that will take 3.78 years of profit to pay the net debt, or cover the net debt. Have I bought this because someone tipped it on a bulletin board? If so, were these the reasons for, what were the reasons for trusting a tip? An article by Motley Fool caught my eye, but I have done much more research, as you can see, and I also have several other oil stocks in my portfolio, so I'm fairly up on the oil industry. 9. Did I research this properly? Really? Answer, yes. See above, you can see all the research I've done. That's got a low PE ratio of 5.62. It's a large, well-known, established company. Price of shares have followed price of oil and other oil companies. 10. Am I buying because I am bored and just want to make a trade? No. 11. Did the nice guy on Twitter mention buying it, and am I just copying him because he sounds like he knows what he's doing? No. But I must confess that it's easy to fall into that trap. I might take someone's idea and do a thorough research, but I don't just press buy for the sake of pressing buy. Another thing I do is the billionaire test. Now, assuming I'm a billionaire and I can afford to buy the company, I divide the market capitalization by yearly profit, and this will give me how many years of profit it will take to cover the cost of the company. So if I bought the company, how long will it take me to get my return on investment back? And in this case, it is 7.164 years, which isn't too bad. And the dividend yield is 4%. So from my point of view of a shareholder, you'll get a 4% dividend. So I've decided upon Shell, and I'm making sure I'm right in I'm buying the right class of share. I've just bought the shares. So if we go to history, orders, and I don't think, I don't think I have. No, I haven't bought the shares yet. I thought I had. I'll go back to the shares. Hang on. There we go. Buy. And I'll buy £80 worth of shares, and that equates to 6.29 shares. And no, I haven't got the funds in. No, I must have bought them. So I have already bought £80 worth of shares. So that's where we are at the moment. So we'll come out of that. Our pending orders, there we go. £80 at market value, and they'll be bought tomorrow morning when the stock market opens, as tonight is Sunday evening and the stock exchange opens at 8 o'clock tomorrow at the London Stock Exchange. So I hope you found this interesting. Don't just press buy. Do your due diligence. Know what you're doing. And as I say, I've bought these shares on my Trading 212 platform. I hope you've found this video informative and interesting, and I'd welcome any comments and observations. So till next time, I bid you a very, very good evening.